Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 21st, 2026, and we're diving into Prologis' fourth quarter 2025 earnings report. Prologis is a global leader in logistics real estate, and we're excited to have John, a senior analyst from Smart Stock Watch, with us to break down the numbers. John, welcome to the show.
Thank you for having me. Prologis has been a key player in the logistics real estate sector, and their latest earnings report provides some interesting insights into their performance and future outlook.
Revenue and profitability overview. Let's start with the top line. Prologis reported total revenues of $2.25 billion for Q4 2025, with rental revenues contributing $2.09 billion. John, how does this compare to their previous performance?
Prologis has shown a steady increase in rental revenues, up from $1.94 billion in the same quarter last year. This growth is driven by strong demand for logistics facilities, particularly in high-barrier markets. Their net earnings attributable to common stockholders also rose to $1.4 billion, reflecting their effective cost management and strategic capital deployment.
And what about their core FFO per share?
The core FFO per share came in at $1.44, which aligns with the analyst's forecast. This stability in FFO indicates that Prologis is maintaining its operational efficiency and capitalizing on its strategic investments.
Operational efficiencies and future outlook. Prologis has reported an average occupancy rate of 95.7% and significant development stabilizations valued at $568 million. How do these figures reflect on their operational efficiencies?
These metrics highlight Prologis' ability to maintain high occupancy levels across its portfolio, which is crucial for maximizing rental income. The development stabilizations indicate successful project completions that are now generating income. Looking ahead, Prologis has provided a strong guidance for 2026, with core FFO expected to range between $6 and $6.20 per share, and same-store NOI growth projected between 5.75% and 6.75%.
That's impressive. It seems like Prologis is well-positioned for continued growth.
Absolutely. Their strategic focus on high-growth markets and efficient capital deployment should support their growth trajectory in the coming years.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of $1.44 for Prologis, and the company delivered exactly that. What does this tell us about their financial performance?
Meeting the EPS forecast is a positive indicator of Prologis' stable financial performance. It shows that the company is effectively managing its operations and meeting market expectations. This consistency is likely to instill confidence among investors and analysts alike.
It's always reassuring to see a company meet its forecasts. How does this impact investor sentiment?
When a company consistently meets or exceeds forecasts, it generally leads to positive investor sentiment. It suggests that the company has a good handle on its business operations and market conditions, which can be very appealing to investors looking for reliable returns.
Key takeaways. As we wrap up, Prologis has delivered a solid performance in Q4 2025, with revenues of $2.25 billion and an EPS that met analyst expectations. Their guidance for 2026 is optimistic, with a focus on maintaining high occupancy and growing their core FFO. John, any final thoughts?
Prologis is in a strong position, leveraging its strategic investments and operational efficiencies to drive growth. Their consistent performance and positive outlook make them a compelling option for investors interested in the logistics real estate sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Prologis' performance in the comments below. Until next time.